Hello, everyone. I'm Anita Sharma. Welcome to Market Call tonight. Our special guest is Kim Bolton. He's the president and portfolio manager of Black Swan Dexteritas, taking your calls, emails, and tweets on technology stocks. Our number toll-free, 1-855-326-6266. Our email address, marketcall@bnmbloomberg.ca. Our Twitter handle, @MarketCall. Kim, always great to see you.
Thanks a lot, Anita. Pleasure to be here.
Thank you. Let's start with the market. Let's start specifically with the S&P 500. Boy, did we see a back and forth situation. The range today between 2768, 2816, finally settling at 2792. How significant is that?
That's a big range, eh?
Yeah.
50 points.
It was pretty volatile today, right?
You haven't seen that. I think that was the most volatile since January the 3rd of this year.
Wow.
So everyone's had a nice ride. I guess it isn't that surprising that the market came off. I think it was surprising that it actually bounced back so well going into the end of the day.
Yeah, the losses weren't as bad.
Yeah. But you had that, so here we've gone all the way from, what, 2350 all the way up to 2800. If your audience recalls back into the fall, sort of November, December, that 2800, sort of that 2800 to 2825 was a support level on the way down.
That's right.
As a result, since it's gone through that and a long way down, as it comes back up, it becomes a very, very significant resistance.
Interesting.
And so I think a lot of the market participants this morning looked at it and no one was willing to actually buy it above 2815.
Right.
And so the vulnerable side was to the downside.
Yeah, the take seems to be that as we seem to be approaching perhaps a trade deal between the U.S. and China, a lot of your colleagues are saying that's already priced in. Give us another catalyst to work with. They're not going to push those stocks higher until they actually see both gentlemen signing on the dotted line. How you talked about the volatility and how you haven't seen anything like this since early January. That doesn't give you the warm and fuzzies what happened late last year in terms of the volatility. Has that changed your approach to investing?
Absolutely. It hasn't changed our strategy of how to approach the technology arena. It definitely changed our tactical approach to it, not the strategic, just the tactical side. If you recall, everyone thinks about December and how the market just fell off a cliff, especially on Christmas Eve. But if you think back, in 2018, you had 6 corrections between 3 and 7%. You had 2 corrections of more than 10%. And so it was our view that this volatility is here to stay with us as we're in the latter stages of this secular bull market. And so we were expecting the volatility to come back. And I think you're going to have a lot more. We changed, as I mentioned, tactically. Over the last 5 years that we've been running the BSD Global Tech Hedge Fund, we've held between 30 to 40 single stocks, long, short. What we decided as a result of all the volatility last year is that we're going to shorten up the bench of the single stocks and actually use some ETFs. It gives you more flexibility, but it also gives you more diversification. And so you can be a little more nimble and agile in the market. So for example, now, we are now we have 51% cash.
Oh, wow.
We have 51% cash. We're out of almost all. We still have the bots, which is the robotics and AI ETF. We still have a bit of the KWEB, which is the Chinese internet, but we sold out and we tiered it. We sort of tiered out of the IGV, which is the software application, the internet software, and the SOX.
Let's talk a little bit. Let's wrap this up with the situation in Huawei. And then my backhanded way of getting into this situation, for lack of a better word, is the fact that one of your top 10 strategic tech trends includes 5G. And within 5G, we've got big data communications and processing, that ecosystem on in your portfolio, which encompasses Huawei. How concerned are you about what is developing on that front, given that pick your battle there. You've got the company, Huawei, filing suits against the government of Canada, the government of the U.S. You've got the CFO, who's also the daughter of the founder, headed to court Wednesday to kickstart the extradition process. Are you at all concerned about this?
And on top of that, Anita, Huawei actually launched a lawsuit in Texas against the U.S. government.
Right.
So they have a lawsuit against the Canadian, now against the U.S. government.
Yeah.
I think the way you put it is exactly right. The Huawei is a battle. The war is actually to have a trade treaty. And so they're willing to give up some of the battles, but they just want to win the war. And so I think you'll have a trade pact. But let's face it, be honest, that's only the beginning. Because as soon as you have the trade pact, both sides are going to be monitoring each other.
And that's the big part of it, right? Because you've got the U.S. coming out saying, all right, it's fine and dandy to actually have the trade deal, but what about enforcement of the laws on what we've agreed upon moving forward? That's where the U.S. seems to want more permanence, if you will, some more strategy in writing in that regard. They don't feel like they're going to get what they want from China. And off air, you were saying, well, guess what? China feels the same way.
Exactly, because they want the rules in this game to be equal opportunity. And so this trade war or trade friction is going to go on for a long time. And then once you have the China and U.S. trade pact together, what comes next? The European trade pact.
Right.
So it's just going to be a continual cycle.
Okay.
We better get used to it.
We better get used to it. Well, we've only got 40 minutes to go on this show, so we're going to get to a commercial break here. We're with Kim Bolton. He's the president and portfolio manager at Black Swan Dexteritas, taking your questions on tech stocks. Our number toll free, 1-855-326-6266. We're getting to your calls next. Welcome back to Market Call tonight. We are with Kim Bolton. Kim, let's start with an email. This one is from AJ in Vancouver. He would like to know about Shopify and your opinion. Is this a buy for you?
It is a buy, but not at this level.
Okay.
I think it's trading right around 189. 248. Yeah. Which is what? That's 248 Canadian, right? So 189 down in the U.S. Love the stock. Investors who actually got into it. They IPO'd in 2015. AJ, you probably know this. It's up 595% since the IPO. But I would, and I actually trade it down in the States, so you'll have to do the conversion.
Okay.
If it's trading right now at about 189.
Maybe we can bring up the US Shopify, yeah.
I would look to buy it, somewhere in that range of about 160 to 165. There's a bit of support down in there.
There you go.
Yep. Yep, there it is. We actually bought it back in, back in 2017, got out far too early. It has a great model, catering. It has that leadership of e-commerce within sort of the small and medium-sized businesses with the subscription and also the merchant side of it. And so it has a great business model.
Yeah.
It's just expensive.
All right, let's see what you think about this next stock. We'll bring in Chandra from Brampton, Ontario. Good evening. Hi, Chandra, are you there?
Hey, good evening. Thanks for taking my call.
You bet.
Yeah, I would like to know about the sales force for a short term and why the stock has dipped today.
Okay.
Why
Thank you.
Why the stock?
Why the stock
It dropped a lot. Is it the best time to get in for a short term?
Okay, thank you. So they did come out with their earnings.
Earnings tonight, yeah.
Yeah.
And, the top and bottom, the bottom actually beat and the top line was sort of right on expectations. The problem was, as with some of these stocks, is the guidance. And the guidance was sort of to the lower end of expectations. So it was off, during the day, it was off. All of the software application companies were off a lot today.
Right. Even before its earnings were out, it was already trading lower. Yeah.
It was down 3.5%, and then at 4:05 tonight, the earnings came out, and it came off another 3.5%, 4% after that. So we own it. We actually owned it also over in the ETF, which was the IGV. Because it's one of the top holdings within the IGV ETF. But we've got out of the ETF. We actually went short a little bit of the IGV last week. So we probably hold about 3.5% in Salesforce, which is underweight for us. So I would recommend it. Let's see if on the.
Well, while you do that, I'll just update the stock. You're right, it closed down by about 3.7% today. And after hours right now, it's under more pressure, off by about 2.8%, Kim.
Yeah. And we have, but we have a 12-month price target of 172.75.
Okay.
And it's not that expensive when you look at relative to some of the other software application companies out there. And they are the poster child when it comes to the software application subscription companies out there. But the PEG ratio is actually 1.68. So it's not as expensive as some of the others. So here we are, we're sitting at, what, 158?
Yeah.
Our target is up around 178. And I think if you can actually buy it here with one sort of 140 handle on it, it'd be good.
Okay, and general consensus is you're a bit more bullish than that. That sits at $176. Thank you very much for that, Kim. Let's bring in Nazar from Scarborough. Good evening.
Good evening. Thanks for taking my call. My question is on BlackBerry. It received $40 million recently from the federal government, which I suppose was an endorsement of their security strength. What do you think of BlackBerry? Would you continue to hold it if you already have it in your portfolio? And Anita, may I have the strict consensus, please?
Of course,
Thanks
Nazar.
for taking my call.
You bet. Thank you for calling.
Thanks, Nazar. We don't own it. We did own it. Again, buying at US dollars. We bought it down at around, it was right around $8, just above $8. We let it go just above $10. So here it is. That's 11.64 in Canadian. Probably works out to just shy of $10. So
we'll get the U.S. chart for you.
yeah, and I would recommend buying it with something like an 8. Oh, there we are. 874. So I was going to say if you can get it down in the low 8s, it would be a good bargain, because you can see it if you go back even further. It really doesn't sort of go under sort of 7. The reason people love it is because of the IP that they have behind it.
Right.
And they've got into and they've been a big supplier into the autonomous driving, and so they've carved out a very, very nice niche.
Okay, and consensus-wise, Nazar, we do have 6 buys, 7 holds with 3 sells, 12-month price target of $12.95. Let's bring in Henry from Hamilton. Good evening.
Good evening. Spotify. It tickled 200, then it collapsed to 135, and it's laying flat at 135. Is the music over for SPOT? Thank you.
Very clever. Thank you, Henry.
Thanks, Henry, for the call. Spotify. We don't own it. We did own it. We, knock on wood, actually got out of it right around the mid 170s. And you're right, it's just got a lot more competition that they've come into, and that's why it's just sort of treading water down here. As you can see in the charts, if you can get it down closer to sort of that 115, 120, that is a level that we would have an interest in buying it.
Okay.
And I think you'll actually have that opportunity this year, so you don't have to chase it here.
All right, very interesting, giving us a taste of what may be coming down the pipe there. Thank you very much, Kim. We are with Kim Bolton, President and Portfolio Manager at Black Swan Dexteritas, taking your questions on tech stocks. Our number toll-free, 1-855-326-6266. We're back in 2 minutes. Welcome back to Market Call tonight. We're with Kim Bolton. Kim, let's get back to the phones. Mary in Nanaimo, British Columbia. Good evening.
Good evening. Could you please tell me what you think of XIT, the ETF of Canadian tech stocks? And if you support it, when do you think would be a good time to get into it? Thank you.
Thanks, Mary.
Thanks, Mary. We looked at it. As I mentioned earlier in the program, as we came into 2019, we decided to actually employ some ETFs. It gives us flexibility and also together with the diversification. We looked at the XIT, but we just found it to be too narrow. We run a global technology, publicly traded hedge fund. And so the ETFs that we currently have participated in this year so far, Mary, is the IGV, which is the software application, the FDN, which is the internet software, the SOXX, which is the semiconductor, the BOTS, BOTZ, which is the robotics and AI side of it, and the KWEB, which is the Chinese internet. So those are the reason we chose those is because it fit into the strategic makeup of our portfolio, because those are the areas that we actually see as trending in 2019. And we just found, Mary, the XIT here in Canada just be too narrow.
All right, great, Kim. Thank you for that. Let's get back to the phones. David in Truro, British Columbia. Good evening.
Yes, it's Nova Scotia, but thanks for taking my call.
Our apologies.
Same country.
I worked out there. It's God's country. I love it.
Yes. Okay, the question is, what tech stock would you buy now or in the near future, and why would you buy it? If you could give me your reasons for that, that would be great. Thanks.
All right, great questions. Thanks, David.
So, David, I take it just one. That's tough. We actually cover, and we every earnings season we probably do right around 200 stocks. So there are a lot of good ones out there, but I would say, David, either Microsoft or Cisco. Microsoft, on the one hand, is the leader, it's the poster child when it comes to the software side. Fantastic management, and they give very, very logical guidance, and you won't get beaten up. On the other side, one that we really like is Cisco. And this is all around that sort of 5G deployment. And Cisco is a big supplier into that, along with, as you were mentioning before, Huawei.
Yeah.
And interestingly, Chuck Robbins today, the CEO of Cisco,
coming to their defense.
Yeah, actually came out and said, it's not a problem. We don't mind competing. And in fact, he actually said that they don't believe that there's anything encrypted into their hardware.
Into Huawei's hardware, yeah.
So anyway, just back to Cisco.
They had a good earnings beat too, right?
Yes. Yeah. It's very similar to that of Microsoft. You're in a technology sector that usually has some volatility. You pick the leadership, and especially in this later stage of the bull cycle.
Excellent. All right.
Those are the ones I'd recommend, David.
All right. So Microsoft and Cisco. Back to the phones. Matthew in Vancouver. Good evening.
Good evening. Yeah, quickly, first of all, I'm pretty impressed with Anita Schaller on the morning and afternoon with the double duty.
Thanks for watching. I'm impressed
awesome.
with you, too. Calling in twice.
Yeah, that's creating change for women in venture capital. I believe that. You're unreal.
All right. Thanks, Matthew. Your check's in the mail.
Yeah. Well, my question's on PayPal. I think, on the other hand, bad company. It took me a year to get it running. Bad customer service, and it was just only at 85 a share, a market cap of 101 billion. It's not bad, but what's your opinion of PayPal? I'd say it's a sell. Thank you.
Thanks, Matthew.
Thanks, Matthew. You know, when we walked into this year and we started to shorten up the bench of the single stocks and extend the bench on the ETFs, one of the companies that we actually sold was PayPal. And it was sort of all in that fintech space. You know, we had Visa and MasterCard, PayPal, and Square. And we just wanted to take it down to two. So we let go of MasterCard and PayPal. You know, here it is trading at 96. It's expensive. You know, we still follow it very, very closely. You know, our 12-month price target on this is $100.65.
Okay.
So it's not that far off from where it is. I would, Matthew, I'd recommend, you know, you buy it somewhere south of $85. You know, and even though it is a bit volatile and expensive, the PEG ratio actually isn't all that high. It sits at about 1.47. But however, you know, the trailing PE is about 56, and the forward PE is around 27.5. So it's not cheap. You're right, Matthew. But look to buy it somewhere in the low 80s.
All right, excellent. Thank you, Kim. Let's take another break here on Market Call tonight. We're coming back, though, with Kim's past picks. Stay tuned for that. Welcome back to Market Call tonight on BNM Bloomberg. It's time now for Kim Bolton's past picks. We'll start on a very strong note. Red Hat, you bought this, or at least this was from July 9th, 2018. And from that point, it's theoretically returned you 31%.
We actually, you know, this is the one that got bought by IBM.
Right.
And I just hope they still allow them to let them flourish, because a lot of these big companies will just sort of swallow them up. But it's trading at 182 as soon as it came out that IBM was going to buy it. We actually sold it at 179.5.
Okay.
Yeah, and we owned it much lower than that 139. We've owned it for a long, long time.
Okay, excellent. Let's get to Twitter now. As of July 9th, 2018, you're underwater by about 31%. Do you still have the stock?
No.
Okay.
Now at 30.5, recommended at 44. We actually own this. We picked this up back just after the U.S. election. So December of 2016, we got it right around the mid-teens, sort of $15, $16. We let it ride all the way up into the 40s. Again, when we shortened up the bench at the beginning of this year, we sold Twitter. We sold it actually at $34.
Okay. All right. And let's wrap this up with Activision, Blizzard, all of these online gaming stocks or video game stocks getting caught in the crosshairs of Fortnite.
Well, in the crosshairs of Fortnite, but all of these stocks, you know, it's currently trading up at about just shy of $42. No, we don't own it. Again, we sold it actually back in November, beginning of December of last year. Just they got overpriced, and we just decided to take profit on it.
What do you think of that particular sector in light of this Fortnite, the popularity of Fortnite free-to-play versus Activision Blizzard and its competitors in the market? Take-Two, I believe? Yeah,
Take-Two, Activision Blizzard.
Yeah.
There's a
Electronic
number of
Arts.
Electronic Arts, Tencent.
Yeah.
The big, they're the biggest one out there by far. We know the space very, very well. Actually, my partner, co-shareholder, Lev Leviev, he's actually in the gaming business. He's over in London, so we know the space extremely well. And it's not a Warren Buffett type of buy and hold. It's a space that you can actually trade it. We've never shorted it because a lot of the of these gaming stocks, if they ever get too cheap, they get bought up. Because all of the companies, one of the biggest leaders, and we were talking before about Microsoft. Microsoft has fantastic leadership in this whole gaming side because they have the development, they have the distribution with the consoles, with the Xbox. So there's a lot of different ways you can actually participate in it. We're looking forward to when this volatility, and you're going to have a lot of volatility this year. There are some ETFs and single stocks that you can actually pick up, and you can see the volatility that these gaming stocks can have.
All right. Excellent, Kim. Thank you very much for that. Let's get back to your calls after this quick commercial break. Our number, toll free, 1-855-326-6266. We're with Kim Bolton. Welcome back to Market Call tonight. We're with Kim Bolton. Kim, we're going to head back to the phones. Don in Ottawa standing by. Good evening.
Thanks, Anita.
Of course.
Kim, I've been casting around for a Canadian tech stock, and I came up with CGI and OpenText, and I was wondering, I understand you'd cover CGI. Thanks very much. Thanks,
Don.
Thanks, Don. We don't own CGI. We have in the past, and this is into the services sector, consulting services sector, and there are a number of significant players. The ones in North America that always come to mind, that are always on the RFPs, are CGI and Accenture. And Accenture has done a fabulous job, actually, in keeping the ball rolling, and they bought a French company, gosh, about 3 years ago, and they were able to actually expand that their footprint over through Europe. So it is a little bit expensive at this stage, trading up at just over 89. On ours, we actually have it, if you can get it down in the low 70s, that's where we'd like to buy it.
All right, let's see what you think about this next stock coming up. This is Ron in Calgary. Good evening.
Yes, hi, Anita. Thank you for taking my call.
Of course.
I'm calling with regards to Universal Display. I bought a contract for a call option when it was at $100 a share. I bought a $115 call option for January 2021. And I just wanted to know some thoughts of what you think about the stock right now that's gone up about $40, $50 here.
Thanks, Ron. Do you like the stock?
Love the stock.
All right. We're on a roll, Ron.
Right now, I think it's trading right around, what, mid-130s or something. And I remember when I was on this program sometime last year. Yeah.
153.
Oh, there it is, 153. Our price target on this is actually 175, so it's starting to approach it.
Okay.
It wasn't that long ago. If you go back into December, it was down the 80s.
Wow.
So you were saying it's up 40. It's up a good. It's almost doubled, right? In the course of a few months. And you can see on the chart, the longer-term chart here, it has been up at 175. Anyway, everything's coming together for this company. And actually, when they reported back in February, it showed that it was all coming together. And Anita, I don't know if you know what they do. They're the ones that have the screens, the patent on the screens.
Right. You were telling me about this company, yeah.
So normally in past smartphones, the screens were layered, and they had about 15 or 16 layers. And then they came out with this organic light emitting diode, OLED, that actually takes it down to about 3 layers. The pixels are much clearer on the phone. It doesn't take up as much space, so the smartphone makers love it because they can actually put other things into the phone because there's more space. They can make it more powerful, the radio frequency, the batteries, the processors, and the GPUs and so on. So, and whether it's Samsung or whether it's Apple, they get a royalty. It's a fantastic story. Now, here we are, 160. Would I buy it at 160? I still own it. We look for it to go up into the 170s. We follow it very closely. But I'd recommend that you could probably get it down closer, 110, 120. With this volatility that you're going to have this year, I think you'll have the opportunity to buy it cheaper.
So you think there's going to be more of what we saw last year? We're not done with all that. You got to trade the volatility. Is that the new normal?
Yeah, I think last year you had 8 corrections last year. Like everyone just sort of remembers the December one.
Right.
But you actually had 6 corrections between 3 and 7, and you had 2 in excess of 10%. And so there are enough catalysts that we see going out through the year that you're going to have similar volatility.
Okay. Kim, thank you for that. Let's see if all that pans out for 2019. Buckle your seatbelts. We're with Kim Bolton. He's the president and portfolio manager at Black Swan Dexteritas, taking your questions on tech stocks. Our number toll free, 1-855-326-6266. Welcome back to Market Call tonight. Back to the phones. Kofi in Calgary. Good evening.
Hey, hello. Hi, Anita. Love your show.
Thank you.
And,
thanks for watching.
Kim, every time you're on, you provide great insight. You do a great job.
Oh, wow.
Fantastic.
Kofi, thank you. Your check's in the mail, too.
And a quick shout-out to Luke McMillan in Calgary. Now, my question's on Square. I've heard some analysts say that they could put it in the same category as the FANG stocks. Does this statement hold water? Thanks so much.
All right, great question. Thank you, Kofi. And some unfortunate news, we should say, coming out of Square. The co-founder, Tristan O'Tierney, dead at the age of 35, I believe.
So sad.
Yeah. Strong company, though?
Very. And God bless the gentleman that passed away today. Is at the young age of 35.
Yeah.
He was sort of the brains behind it. He was the developer.
That's right. Former engineer at Yahoo and Apple.
Yeah. And but Square, as I mentioned, we sort of shortened the bench on our stocks, but this is one of the ones that we kept. We actually own it at $69, trading just below 75, and we have a price target of 82. It's not cheap. It's got a PEG ratio of 2.6. However, the growth and the tailwinds that this company has, as they said in their most recent earnings, their organic revenue growth is growing at 53% year over year. And so, they have become a leader. When you think about the fintech space, you always used to think about Visa, MasterCard, and then PayPal came along, and then here Square is actually in those ranks up there. And so, trading at around 75, we still own it. Expect to let it go around 82.
Okay, great. Let's see what you think about this next stock. This is an email that we received from Irene in Hamilton, Ontario. She would like to know about Snap stock and specifically if it can continue its upward momentum.
It's an interesting stock. It really got pounded last year, and rightly so. They mismanaged a lot of their offerings that they were putting out, but then you can see it actually has snapped back from
Clever.
Down just south of $6 to just almost $10. Our feeling why this has happened has really been a reaction, not so much to Snap, but a reaction to Twitter. And so when Twitter gets its feet under it again, I think the money is actually going to rotate out of Snap over into Twitter. So a lot of people will sort of use this as a pairs trade. One of the famous pairs trades within fintech was Visa, MasterCard. Now people are starting to trade sort of Snap and Twitter. And you can see how Snap has gone up and Twitter, yeah, see?
It's a great chart.
So there are, good job. It is a good pairs trade. And you can see at this stage that Snap has actually got ahead of Twitter, and you haven't seen that in a long time. So that's where we think the money has come from.
Well, what does Twitter have to get right? Do you have all the time? Is there enough time in the show?
Well, they have got a lot
yeah.
right. Here it is, Twitter, I think it was trading at about $34, $35. Been up as high as 45. But if you go back into the end of 2016, we actually picked it up at 15. So I think a lot of the, more recently, this obstruction of justice against Trump is reflecting on the Twitter stock.
Right.
And so I think you can actually probably buy Twitter probably with a 20.
Now.
Yeah, you can buy it with a 20 handle, and you can probably let it go and with a somewhere in the low 40s.
Okay, very, very interesting. So you're bullish on Twitter.
I think so, and I think one of the reasons is actually your caller asking about Snap, because I think that's where the rotation of the money is going to come from. Okay,
excellent. Kim, thank you. We are with Kim Bolton, President and Portfolio Manager at Black Swan Dexteritas, talking about tech stocks. Our number toll-free, 1-855-326-6266. Welcome back. We are going to take our final email of the evening with Kim Bolton. This is from Dave in Mississauga. He would like to know about MongoDB. He says it looks very interesting. Would you buy in at its current price? We'll throw up the chart.
Yeah. We owned this for quite a while, and we actually let it go back in January when we were doing that restructuring tactically, letting go some of the stocks and buying into the ETFs. And it's had a fantastic run. We have an investment advisory committee. We have a number of serial tech entrepreneurs and also some seasoned retired people on that committee. One of the fellows is a retired fellow from Cisco here in Canada. He brought this to our attention back in 2015. I don't know if it goes back, but we actually rode this in a.
Would you like a 5-year?
Yeah. And so at this stage.
Not enough info on this company.
Yeah. At this stage, we believe it's expensive.
Okay.
I just look here. It's trading at about $97. We have a 12-month price target of 107. So it has maybe about another 10%, but it just doesn't fit into the portfolio right now.
Okay, well, let's find out what does fit into the portfolio. We're taking a break here on Market Call tonight. We are with Kim Bolton. His top picks are next. Welcome back to Market Call tonight. We are with Kim Bolton. Time now for your top picks, and let's start with Equinix.
Anita, we started this fund 5 years ago this past October. Equinix was actually one of our original holdings.
Really?
Yeah. So it's sort of been a pillar in the portfolio. Equinix, as I mentioned before, we have this investment advisory committee. There's 3 of the members actually come from the data center space. And Equinix is the poster child of data centers out there. They've been doing it for a long, as an independent data center. All of the clouds they have, AWS and Microsoft Azure will have their own, but sometimes they actually house it within Equinix, and it actually has a yield on it, which is unusual for a technology stock. It's got a dividend yield of 2.5%. And it's just very, very reliable. It almost trades like a REIT within a technology portfolio. So it brings down the volatility in the portfolio too.
What about Tableau software? Why are you bullish on this? You like big data.
Yeah. You'll see a theme in here in that one of the things that we've drilled down over the last year is into the whole big data space. Big data is made up of 4 things. Sensing, sensors. You ever get in your car now when you go through a car wash and your car just lights up with all the sensors. Sensors are everywhere. Then you have the output hardware, which is really what the hardware that is designing what the customer really wants in their desired experience. But then there's big data hardware, which is in the cloud, but then also in data analytics. So the cloud would be like an Equinix. And then the data analytics is Tableau. And symbol is data. There's a number of companies out there that have leadership in this space. There's Tableau, Splunk, Salesforce. But Tableau was the original one that actually took Excel spreadsheets and put it into a dashboard. Remember when you used to send something off to the corner office where the IT people were and you'd tell them what you want? Now, Tableau actually gives you the software tools that you can actually do it yourself.
Amazing.
And the evolution that they've done there has been fantastic. They've moved from the licensing into the subscription. They got into that early, and it's worked out very, very well for them.
All right.
Last one, Cisco.
That's right. You've been talking about Cisco. A viewer was asking you what tech stock you would have in your portfolio. You said Microsoft, and I believe you still have Microsoft.
Yep.
Is that correct?
Yep.
Cisco. Make the case again for Cisco.
Again, this falls into the sort of big data hardware side. Big data hardware, for the next 5 years, they expect, and we actually bore this from Gartner Research, $3.8 trillion is going to be spent just on the hardware. Forget about the software, just on the hardware.
Wow.
And Cisco is a leader in this, together with Huawei, and together with Ericsson and Nokia, and there's a number in ZTE and so on. But Cisco is very formidable in this space. And it's interesting because they play between both the processing side and also the telecommunications. So they cater to both sides of big data hardware in that big $3.8 trillion business.
A lot of the stocks, before we let you go, a lot of the stocks you advised our viewers about getting in a bit lower. You're seeing some downward movement. How soon do you think we could, and dare I use the word correction, how soon do you think we could see that? We're already starting to see the markets pull back a bit.
As I mentioned earlier, we actually hold 51% cash. Never had so much cash. However, and we've sort of scaled it down over the last 8 weeks to this stage. But even last week, with having 51% cash, 49% dedicated to single stocks and a small amount to ETFs. Last week, the NASDAQ was up 0.9, the Russell was flat, the S&P was up 0.4, we are up 0.6. So our stock portfolio is still making us very, very competitive in the space. And so we believe that you're going to have multiple corrections over the course of this year.
Okay. Well, it was great having you today to explain the happenings on the markets. Thanks for being here with us.
Thanks a lot, Anita.
That is Kim Bolton. I'm Anita Sharma. Folks, thank you so much for calling in. Please consult a qualified financial advisor before making any investment decisions. Have a great night. We'll see you tomorrow.